Why aren't we more scared about the inflation indicator today?
You know, for one thing, more people working and successfully and getting paid more is great. It's not inflationary. I don't believe wage inflation, never did. Inflation is a monetary problem. Even the Fed's backing off that. Today, I thought it was all energy and gasoline.
And so does that...
That really, you know, we had a big spurt in prices, right? And now they're coming back down.
Right.
And the dollar was falling, but now it's stabilizing. So year on year, you're at 1.8 core CPI, which will probably translate to about 1.5 PCE deflator. Nothing to worry about.
And so gasoline prices are high. Does that mean there's no chance to add in a federal gas tax if we're already creeping up?
You know, my take is don't do it federally. If the states and localities want to do it, I wish they wouldn't, but that's up to them. All right, Reagan used to call the gas tax a user fee for highways and bridges and so forth, and he had a point. All right, I'm not a big fan of the gasoline tax, but I wouldn't do it for the whole nation. Each state has a story. Let them do it. Okay, federal government doesn't have to do it.
You Republicans are putting an awful lot on the states lately. It seems like you want them to pick up the bill for everything.
Everything.
Gas tax, infrastructure spending.
Like as the founders visualized this many years ago. All right, states are very important. We are the United States of America. We are not the big government federal hegemon of America. We're the states of America. So, yes, they should bear more responsibility.
Gene, let's bring you into this conversation. There have been those who are noting the deficits that we're generating these days and are starting to get a bit concerned, saying that we are adding fuel to a fire that's already going pretty darn hot right now and worry about that. Not to mention, of course, generating deficits at a percent of GDP that we haven't seen in some time. Are you amongst that group?
Well, I'll tell you what really worries me is the degree that the fiscal policies we've seen from the Trump administration, I think, are going to crowd out exactly the type of investments and commitments we need to workers, to our long-term growth, long-term productivity. I mean, consider, you know, you had Democrats and Republicans willing before to bring down corporate rates into the 20s, have used the one-time money coming back for a major infrastructure fund. It would have been fiscally responsible. It would have given a strong boost to infrastructure. Instead, what you saw was they said, hey, let's borrow $1.5 trillion that the American people have to pay back, have that deficit go up. We'll give most of that money to large companies and well-off people who don't need that. And then we're going to come back with this Marie Antoinette budget and an infrastructure plan, which is at best false advertising. At worst, it's fraudulent. There's actually no money there at all, maybe a few billion a year. And it's supposed to have this huge leveraging impact. And I think it's a darn shame. And that really is what worries me, which is that they have for no reason, created this huge deficit, and I think it could do some crowding out on the private side, and it's definitely going to crowd out. We're already seeing it, the type of important public investments like infrastructure that our country needs.
Gene, with respect, we've known each other a very long time. With respect, Obama was a champion of budget deficits and debt.
That is just
hard.
Larry,
look at the numbers.
You're too smart to say something like that.
Well, look, let me finish. Looking at the Obama budgets and looking at the Trump budgets. Now, budgets are statements of policy. That's what they are. You may not get them. You may not get the policies. I mean, Trump's going after entitlements, Medicaid, Medicare, small entitlements, workfare type issues. I don't know if he'll get it, but I think he's on the right track in terms of policy discussion. In terms of the debt, look, Obama took the debt from GDP as a share of GDP, 52% to 77%.
Larry.
Mr. Trump is going a much lower route. I mean, he starts to pay for the tax cuts. We're going to have to borrow in the first couple of years, no question, about 4% of GDP. Their budget has it going down to 1.5% of GDP. We'll probably disagree about the economic growth assumptions, but Gene, I think we can get 3% growth, and I think the business tax cuts are going to benefit working folks and wage earners the most. They're going to add to productivity, and we'll get the best investment boom we've had in 20 years plus.
There's so much misinformation from my good friend Larry. Let me try to respond. One, Barack Obama, you might have remembered, inherited the worst recession since the Great Depression. Deficits were as high as 10% of GDP. When they left, they were down to 3%. So he cut the deficit from 10% to 3%. And he didn't do it by doing things that could border on being cruel to working Americans who are still struggling to get by. Then you have President Trump comes in, benefits enormously from inheriting this stronger and improving economy that President Obama left them. And then he borrows $1.5 trillion. And Larry, there is nobody really who believes that you're suddenly going to, because of this tax cut, have forever, not just for a year or two, but forever have 3% GDP. In fact, the Joint Committee on Taxation, the one neutral arbiter, thinks it's like 1/10 of 1/10 of a percent of GDP. So that notion that the debt or deficit is coming down, there are no credible independent people who do not believe that Donald Trump is sending our debt up higher. And my argument is not even for a good reason. There was no reason that corporate tax reform couldn't have been revenue or deficit neutral, as President Bush, as former House Ways and Means Chair Camp, and President Obama had all proposed.
I think that business tax cuts will be revenue neutral. In fact, I'm even more optimistic about the economic growth potentials. I appreciate that you and I, disagree, but respectfully, that's our view. Look, you're right. President Obama inherited a bad recession. I get that. I totally agree with that. But you chose a different path than the one Trump people are choosing. You were spending, and you were regulating, and you were taxing. And Obamacare was a huge new entitlement. President Trump is trying to unwind that. He is deregulating. He is dropping particularly business tax rates, which, I will say, helps the working class and the wage earners the most. There's a lot of evidence to support that. I know there's disagreement, Gene, but there is evidence to support that. And we will promulgate a better economic growth rate.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.